So Mike, how many Bitcoins do you buy?
Not in the business yet. You know, it looks like it's moving fast. Morley and I had a conversation about this late this afternoon. I believe that the public will be able to invest in that particular investment. And it's a little in between. It's not a currency as recognized yet by central banks or governments. And yet we have at least one major corporation that's going to accept it, you know, as a form of barter. Okay. So I believe you will see by probably late April, maybe a little before, an approved either a mutual fund, closed-end fund, ETF, something like that, that will allow you to invest in it if you so wish. That's what I believe right now.
That'd be
I
interesting.
think Fidelity doesn't, Michael, I think Fidelity allows their
They may.
client.
I know that we will participate. I was in on a conference call. We will be participating in the next 60 to 70 days. So I'm assuming that the Securities and Exchange Commission and all the other regulatory bodies need to approve this before you bring anything like this to market to be traded, whether it's an open-end mutual fund or a closed-end.
Yeah,
So-
my neighbor in East Windsor was one of the Bank of New York Mellon ADR experts. And
Yeah.
I had him come here about 10 years ago. I'm
Okay,
going to see if I can contact him and
I
maybe.
think that's a great idea.
Yeah, yeah.
Like I say, it's not you know, it's not that we don't trade alternative investments. We do. And that can be anything from commodities to currencies, so on and so forth. But you have something that is unbelievably volatile at this time. When Morley and I had this discussion earlier this afternoon, you know, it's, Steve, are we losing some pictures? Are we losing some people? Or
No, I don't know what happened here.
it looks like,
Let me just see what.
okay.
We got,
I'm getting all kinds of things on the screen now.
yeah,
Sharing the screen.
I have a feeling we just got,
We're viewing Mike's screen.
I think we just somehow got hacked.
No.
Yeah.
Right now we're viewing Mike's screen.
No one should be able to do that because I'm the host.
Right. But,
So
you know,
we ask that everybody not sign in until after 6:25. So it's after 6.
All right, let me just see if I can straighten this out.
go ahead. Yeah.
I'm viewing your screen, Mike.
All right. I'm seeing on the left side, I see 5 of you on the right side.
Yeah,
On the left side, I have a bunch of logos from Facebook and let's see, who else? CNBC and
yeah, that's from yours. It says Michael's screen. Now,
Yeah.
who's Michael? Is it Michael
Not
Bauer or is it
Yeah.
Michael Eisner?
well,
Mike,
former head of Disney. Yeah. Okay.
I don't know who's, let me see.
Now, the other people that I can't see, are they still with us?
Yeah, let me.
Yeah,
I think they
everybody's
are.
here except,
I see about 20 people.
Oh, well, that's good. Okay.
Let me see if I can straighten this out.
Okay. Take your time.
Okay. I don't know what happened here.
On the bottom of your screen, Len,
Yeah,
do you see a share screen button in the middle? A
Yeah.
green button?
yeah.
And you see on the top, it says you're viewing Mike's screen. Is that what you're saying?
This will stop. This will stop.
Yeah, someone's screen is being shared.
Right. Somebody's sharing the screen.
Yeah, how can they do that? They're not the host.
There
There
you
we
go,
go.
it's out.
Okay.
You know what? Just click in the upper right-hand
You did it.
corner
You
where
did
it
it.
says view.
We're good.
Just click standard.
Yep.
All right, we're good now, Len, whatever you did.
Yeah, okay,
I think a few more people are just signing in right now.
yeah.
I see Gary, Lauren, but no picture.
Yeah.
No.
All right.
Azad sawalo ko gilami.
You can, everyone can unmute if you want.
Okay,
Let's see.
so just to finish that point, in dealing with the question of Bitcoin, it makes it extremely difficult to have something trade like that that's so volatile. Okay, until Elon Musk stated, what did he say, Morley, Monday, that you now can take Bitcoin and buy a Tesla.
Mhm.
No other company had accepted it as a bartering currency, okay? Which is difficult because even when you're buying a car, so how many Bitcoins do I have to take from my wallet to buy a car, whether it's worth 35,000 a Bitcoin, 40,000, 20,000, I don't know. It's very difficult to barter that way. So I think we're in the process of trying to figure out what is exactly Bitcoin. Up to now, I treated it, as I said to Morley earlier today, I treated it like a baseball card, okay? A demand and supply. So if anybody's on here that, gets involved in collecting, they know the 1909 Honus Wagner tobacco card, there's only 3 of them in the world, are worth in excess, I think, of $3.5 million in good shape. Okay, but I'm not sure that Tesla would take that as part of payment for a car. But up to now, it was plenty of people would buy that Honus Wagner card, even though the intrinsic value is just a picture on a piece of cardboard. Yeah. So demand and supply. Now we have the first step this past week of a company willing to acknowledge that it is some kind of currency. There's some buzz in the marketplace that Apple may be considering also. So, powers bigger than us are probably going to decide this, but my guess is in a currency, you need something to back it up, not just speculation. So that's why I think the regulators are struggling with this. We know that you bring in $1, you can get $1 worth of anything.
Right.
The other thing that may lead, interesting enough, to these alternative currencies, there's 2 factors. One, you're finding people, I would say, under the age of 50, maybe even under the age of 60, that don't want to deal with currency or cash anymore, or checks. Between PayPal as a payment system, Venmo, some of you may be familiar with. I know that we have clients that transfer money in and out of their accounts with no, what you would consider conventional check writing or anything. Everything is transferred digitally or electronically.
Through Zelle. There's a app called Zelle where
Yep.
you can email money to.
Exactly. As Venmo, as Zelle, there's a number of them. The other factor that may start to lend toward this type of alternative, we'll call it currency for the time being, may be, and this is definitely for collectibles, art, baseball cards, whatever, is that we may be at the end of this year into next year, we may be approaching some inflationary pressures based on what we're going through last year and part of this year. So if you do collect anything, you'll note that if we do have these inflationary pressures, whatever you're collecting will be worth more in 22 than it was in 2019. So it's just that's just a fact on collecting. But it's a little too early to call the shots here right now.
Yeah,
Anybody bought Bitcoin that's on the call?
I don't know how to buy it,
Yeah.
frankly.
As far as I know, right now you have to do private transactions, but you said something about Fidelity having something. That's a possibility.
Yeah, Fidelity's had a fund for a while. I've
Right.
been like monitoring it, but I never actually bought it. But
Okay.
it exists.
So, I mean, I guess that may be possible that if you see something called alternative investments, that may fall into that. And look, Elon Musk, what did he say? That I'm not sure whether he bought it personally or under Tesla, but they took a $1.3 billion position. Well, let's just say that we value Tesla north of $100 billion right now. So that's 1% maybe of their assets. That's not unusual to have a gold or silver or anything like that. There's obviously some type of value. People are willing to pay for it. Hard to know what the real value is. And let's not get it mixed up with what went on in the market a couple of weeks ago with GameStop and Class. That's a different story altogether. But staying with that, the question is will it move from quote unquote an alternative investment to a currency? It hasn't been up till this week. Now, stay tuned. We'll have to see how that goes.
Well, the other risk, Michael, is it's encrypted, and I read that there was someone who had $2.2 million and it couldn't open it.
$200 million. He bought it at less than $500 10 years ago or 15 years ago. If any one, I'll dig it out. I think we had a discussion on this, if I'm not mistaken, of what exactly is, cryptocurrency. So very quickly, it is done with algorithms, computerization. Okay, I can grab. Didn't we have some kind of conversation on this maybe a couple of years ago, Lynn?
Yeah.
I put out an article on it. Yeah, that I had read. So basically, it's an
I still don't understand it, however.
Okay, so quickly, it's an algorithm, and most of it's produced, believe it or not, in the southern part of the state of Washington, because it requires so much energy from high-powered computers that they use hydroelectric power to keep it within a reasonable cost. Yeah, so it's not that unusual. The fellow who's a German that I read the same article as you forgot his password. And it seems that according to at least the Bitcoin rules, you only have 10 times to get your password, otherwise you lose the money. So all of us better be careful and write it down carefully, right? As the way we feel, short-term memory gaps, okay?
Who do you lose it to? Who gets it?
That's a good question. I think it just floats out there and nobody gets it, okay?
Yeah, that's true. Nobody gets it, but I think you can buy now an ETF if you want, and then you don't have.
Well, that's what we just talked about. I think that's coming. I don't know of it yet, but I've been informed that there'll be some kind of closed-end fund or ETF out by sometime in April.
I think it already exists.
I'm sorry?
I think it already exists. You already can buy if you like.
It may. I don't know where it is. And all I'm saying to you, if it's a pure cryptocurrency, get ready for the ride, okay? It was only about 4 years ago, I think, that I remember coming across it personally, somebody who sold me my laptop, an Apple, and he had bought one, a coin, which I wasn't familiar with it at that time, for I think $850, okay? So if he held on to it, nice piece of change. So that's basically, it's limited, which starts to fall in under the collectible type of situation versus currency. And like I say, I won't be surprised that these alternative types of investments will rise more to the surface if we do come into a inflationary period, which there's a good case that we may in the next 6, 9, 12 months. So you can't print $5 to $7 trillion worth of dollars, which we've done and in the process, without some type of, results coming out. And there's going to be a price to pay. So hold on to your money.
Anybody have any particular questions on?
Yeah,
Bitcoin?
Len, did you want us to try to follow some of, or Steve, whoever, did you want us to follow some of that profile that those two guys were going to talk about?
Yeah, Steve, unmute. Steve, you're muted.
Oh.
Steve, you're muted.
Yeah, why don't you try to do that?
All right, Morley, you wanna start?
Yeah.
The first thing was about what was going on with Robinhood, Reddit, and the shorts versus the longs. So I think Morley will,
Yeah,
get
well,
started.
The
Yeah.
first thing you have to understand is, how do you short a stock? What does that mean? What it means is that you're selling something that you don't own to somebody else. And what you have to do is you're supposed to go out and borrow the stock and sell it short or sell it. And then at some point in the future, you hope to buy it back cheaper and then replace what you borrow. So what you have here is a lot of the hedge funds do this type of trading. So somebody recognized, because they printed out short positions on particular stocks. And I guess they saw that there was a heavy short position by the hedge funds on GameStop, because they thought GameStop was going to go out of business. And it's in rough shape, GameStop. I think it got down to $5 a share. Well, the short interest was 160% of the outstanding stock. So you say, well, how do you get 160% short? You can't borrow more than 100%. Well, what happens is that a lot of the brokerage firms allowed hedge funds and short sellers to sell short and get the stock sometime later and then replace it. So they were borrowing from each other and they lent out more stock than there was available. So what happened was you eventually have to cover that short. But let me stop for a second and make sure you understand what a short sale. Anybody have any questions on what a short sale is?
Yes, I still do. It sounds almost illegal, selling something you don't have.
No, it's betting that the stock is going to go down, basically.
And you said they were selling more than the company had.
Well, I don't know if it's illegal, but the SEC or the brokerage firms allowed these hedge funds to sell the stock short without borrowing it. Well, if you had to borrow it, you obviously couldn't borrow more than 100%. But if you could sell it without borrowing, you could sell as much as you can, hoping that you're going to buy it back. Well, this is where they got burned.
Isn't that giving them an illegal advantage over other people, the hedge funds?
No, what's the
illegality?
What other people do, they just let the hedge funds do it.
No, you could do that too if you want.
No, you can personally do that. All you have to do is have a brokerage account that you're permitted margin on it to borrow. That's all.
Okay, it's margin. They got it on margin. Okay.
Yeah, but you can do that.
Yeah, you can do it, but the average person's not familiar with short selling, so they don't do it. But these hedge funds are big short sellers, a lot of them. So now when the people at Robinhood is a brokerage firm which has a lot of young millennium day traders with nothing else to do. So they recognize that there's this big short position. So if I start to drive the stock up, you as a short seller have to buy it at higher and higher prices. So the more I buy and the more I drive the stock up, the more you're going to get called because you don't have enough margin to carry the stock. You shorted it at, let's say, $10 a share. It's now $100 a share. You have to have a lot more margin in your account. So they're forced to sell. So what you got a bunch of people buying the stock to drive the price up. The hedge funds trying to cover and all the way up. And what happens once the short sellers rather have covered their shorts and they're not short anymore, the stock drops like a lead balloon, which it did from $400 a share, down to, I think it's about $50 now.
Yeah, even it dropped into the 40s today.
Yeah, and it's still not worth $40 on a fundamental basis. So the people that got burned were people who didn't understand how it worked and thought you just buy this stock, it goes up, and if they were lucky enough to sell it before it peaked out, they made some money. But somebody's left holding the bag. It's like musical chairs. There's always somebody who doesn't have a chair. Well, there's always somebody that's going to lose a lot of money in the short selling. And there's a few others, stocks that have short positions, American Airlines and one or two others. But they couldn't do this if people were not short the stock. They couldn't drive this, they could drive the price up, but there's nobody to buy it at these ridiculous prices because they're not short. So it's not something that's going to hurt the market, or we're going to see a lot of happening in quite a bit.
So Morley,
Is there any
Morley,
difference between a put and a short, or is it the same?
A put,
Buying a put and shorting, is it the same?
no, it's not. Buying a put gives you the right to sell a stock at a given price. A short sale is you sell the stock at whatever price you sell it at. You borrow it, you sell it, and you hope that it's going to go down, and you can buy it back.
But put is the same. Put is the same,
Stock
isn't
goes
it?
down, you make money on the put if you bought the put. If you sold the put, then you're not going to. If you sell it, if you buy the put because you want the stock to go down, you sell the put because you think it's going to go up. Well, it's not going to go down.
So what you're saying is when you short a stock, has nothing to do with options?
No,
Uh-huh.
it's a different animal.
Uh-huh.
It's
All right,
different.
does everybody know what the other name you saw in this besides Robin Hood, like Morley says, which is based?
SNDL.
I'm sorry?
There was the next one is SNDL.
No, you're thinking Reddit, aren't you, Mike?
Are you thinking, yeah, does everybody know what Reddit is that you saw in these stories? So Reddit is
Well,
like,
I signed it up. I signed up for it and I'm watching them. What is the next one?
oh, there you are. Okay, so Reddit. So what is Reddit? Please tell everybody.
Talk to me?
Yeah, you don't have your,
well,
you don't have your video on, do you?
It's a message board. All it is, it's a message
Correct.
board. And you can see in real time how people are promoting a specific stock and they say, hold it, it will reach the moon and stuff like that. And,
Okay.
and people,
it's-
what the issue is here, I mean, the way it works is that people put really a little bit of money. They buy 5 shares, 10 shares, but there are a lot of them, millions. So the effect is that is a lot of money is chasing that stock. So,
Right. So
but these
basically,
people are not losing much money. They lose $10, maybe not 10, 500, $100. It's not that they are losing a lot of money.
Len, who's
They
talking
don't
to
care
us?
so much.
Can we see who's talking to us?
Put your video on.
I think
Oh, sorry.
Yitzhak Ronan is talking.
Oh,
Yes,
okay.
actually, I almost bought the SNDL because I was watching what they are being discussed, and I almost bought one, and then the next day and the day after, in the last few days, it went up like crazy. But I
All
didn't
right.
buy.
So basically, Reddit is like your ultimate chat room, okay?
Yeah,
So what happened here is that not only did you have these, and they allow, again, through Robinhood, which is like an exchange that you would be trading, they would allow the 5 and 10 shares. However, because now not only is the SEC involved, but the DOJ, Department of Justice, is now involved, it turns out that it's not the 5 and 10 shares that really made this happen, because they tracked the amount of volume, as Morley had mentioned, on betting to go down versus coming up again. And now it turns out that some of the big boys that weren't caught on the short side, there are certain hedge funds that like not only, but 90% short. Most of them are longs and shorts, both. They try to hedge the market. So what it turns out to be that the volume that they're finding in these stocks, so GameStop was first, then a company by the name of Koss, those are the old earphones, okay? American Airlines, about the top 10, you can get it anywhere you want, just Google it, top 10 companies that were shorted, started to be with GameStop. The volume that was traded was unbelievable, not the 5 and 10 share guys. So what jumped on here? Other hedge funds, money managers started to see a good thing happening for them. They jumped on and jumped off probably in the same day, okay? Remember we had a conversation about high frequency trading? Welcome to the world of high frequency trading. So if you try to catch these trends, please be careful that you can get burnt if you think that you're going to be making a quick buck. You may, but you very likely may not. Okay?
Yeah, Steve, you had a question. Steve,
Steve, he's out again?
Yeah. Anyone have a question?
Yeah, Reddit was creating the demand
Right?
yeah,
by having tens of thousands, maybe even millions of people. And Robinhood, what they were doing is you could even buy fractional shares from them.
Right.
So by them looking at the high shortage of companies, especially 30, 40, 50, 60% of their stock shorted, there's not enough volume to cover. You go out into the market, you can't cover it.
Correct.
Especially when you get squeezed. Short squeeze, that's what the short squeeze was.
Correct.
And you know what it reminds me of, besides being a crap game? Because that's really what it is. It's a crap game. They're creating an artificial demand, and the first one's in, make the money. The last one's on. You know how it works, right?
Yeah.
Like a Ponzi scheme.
Yeah, you lose all your money. It almost reminds me of, remember Heard on Wall Street years and years ago? Remember that article? It used to be in the Post or the Daily News. Heard on Wall Street.
Okay.
Give you tips, and all their tips worked out. You heard it today. 2 days from now, the stock went up. They found out that they were giving the tips to their friends for years, and that was Heard on Wall Street. Guy went to jail.
There you go.
But that's what they're doing. I mean, that's really what's going on with this stuff. It's just a crap game. When you started talking about Bitcoin, though, I don't know if you caught the article. India, they're looking to ban it.
Yep.
In India. Now, from what I understand, is governments are the only ones that can print currency.
Correct.
Bitcoin isn't a currency.
No, you're right.
Tool. So we really don't know where this stuff is going.
Right. Well, up until Tesla accepting it, you could only barter between one Bitcoin person and another that accepted. I'll just call it alternative investment for the time being. Okay. And the price of it is demand and supply. Well, that's not how currencies are traded. They're set to a certain limit. They'll go up and down in valuation compared, for instance, the dollar to the pound to the euro to the yen. So we're not in the currency, but if Tesla is saying this, and we'll have to see if this turns out to be so, now you're talking about at least a bartering tool that starts to almost border towards some type of currency. Yeah. It's a little too early to say currency, sure.
Well, one of the things you got to remember is that Bitcoin, when it first started appearing, was a medium for drug dealers to move money.
And money laundering.
Yeah. Right. So if you think about it, there's a lot of drug dealers out there that have billions and billions of dollars, and they can't spend it anywhere.
Right.
But they can they could buy a Tesla now.
Exactly.
So I think the government's going to shut down the whole operation, to tell you the truth.
I wouldn't be surprised if it just moves back again to an alternative investment. I think it's widespread enough that people will trade. And there are other things besides Bitcoin, in this cryptocurrency, world. And that's fine. People trade stamps, people trade, like I say, baseball cards. This may turn out to be, but, Elon Musk certainly said it in another, that all of a sudden he was willing to barter an automobile for cryptocurrency.
Right.
So,
Why does it take so much energy to create this, who knows, whatever it is, Bitcoin? Why does it take energy from compute? I mean, I don't understand that piece of it.
It takes tremendous computer power to do this. I don't know how big the computers they have.
and they're like supercomputers, right? Steve, am I right?
Because you see, what happens is every week there's a puzzle that needs to be solved. It takes a huge computer power to solve it. Millions of computers are trying to solve it. The one that solves it gets several Bitcoins.
There you go.
That's the reward for solving that puzzle. So every week there's another puzzle that is being presented to everyone, and anyone who can solve it can get several Bitcoins. And they're chasing those Bitcoins that are given for free.
Yitzhak, what's going on with that is if you look up a company, MARA, Marathon, it's not oil, but Marathon something, MARA. They built a data center in Montana.
Okay.
Okay, and they built this data center, holds 10,000 computers. The computers are
Right.
somewhere between $10,000 to $15,000 each. It costs $7,000 in electricity to mine
Right.
one Bitcoin.
Right.
Now, when it was 6,000, it was like a break even. At 40,000, it's a whole lot better.
Yeah.
Anyway,
So that's how they call it, mining.
yeah, they're mining. All you're doing is, and you don't even have to solve the algorithm. All you got to do is get close to it and not go over it. It's like crazy stuff. But the plant in Montana, they had to build a power plant to power it. 105 megawatts.
Right.
Burning fossil fuel. So think of that when the environmentalists get on them.
Well, that's why they created what I was saying to you in the southern part of the state of Washington, because they could use the Columbia River, which is plenty of hydroelectric power. So it's inexpensive power to, again, be able to power up these supercomputers.
See, and then you got to look at the other thing also. There's going to be 22 million Bitcoins when they get done.
Okay.
Right now, there are about 19 million or something like that. So there's a finite number. When they hit that number, they're going to stop mining. So all these companies are just doing this just to get to that number. They don't even know if they're going to allow more. So at that point, you have a finite number of Bitcoin, period. See, now there's still money.
But there's a new one. There's a new one that is not limited, not capped. It's called Doge.
Yeah, Doge. Yeah.
So this one is not limited.
What's it called, Yitzhak?
Doge, D-O-G-E.
Doge.
D-O-G-E?
Yep.
Yeah, and this one is not limited. It won't be capped. I mean, who knows what will happen with Bitcoin when it's capped? The value will go up to the sky.
Well, like I said, it's a crap game. It's not investment.
Right.
It's a crap game.
Rolling the dice right now.
Yeah.
And you would have to have the regulatory authorities classify what it is, and that the central banks around the world would accept it before it stepped from an investment, as speculative as it might be, to a currency. I don't think we're there yet, but let's wait and see.
I think
one of the values is that you're not being taxed on its appreciation. So it's like an IRA.
Well, you're not taxed on any appreciation of any collectible. If you consider it like a collectible.
Yes, correct.
I mean, you would have to declare. So if you bought a stamp for $2,000 and you sold it for $10,000, if you had a cash transaction or a check, you'd have to report it to the government if you so wished. Yeah.
I think there's only one good reason to buy Bitcoin here. That's because you think some idiot's going to pay more for it than you paid for it, and you can sell it to him.
Well, let me ask you a question. If there's a finite number of Bitcoins that are in existence when they reach the 22,
right?
It'll be a demand. It should cause the price to go up.
Yes, but so let me give you an example. Let's assume that you take the moon and we sell 1 acre parcels on the moon. Okay. Once we sell all these 1 acre parcels and fill up the moon, there's no more. Should the price go up?
Depending on the demand.
It depends on the demand, right?
Yeah. Well, who wants a 1 acre parcel on the moon? What are you going to do with it? Unless you think,
maybe then it will stabilize. Maybe then.
Well, you'll see what it's not even a question of stabilize. Is the Bitcoin a currency or an investment? If it's an investment, like a piece of art on the wall or a stamp in your collectible, that's one thing. If it turns out to be that you have a currency, another currency that you didn't count on, then you've got something here that will be acceptable in a banking system, whether it be commercial or central banking. but the central banks and the governments are going to get involved at that point. So this is pure speculation now.
When you mine the coin out of the computer, where do you get the coin?
It's not a coin, it's a token. And that
Okay,
token,
it's got
It's a
to be
string of
deposited somewhere,
letters.
right?
It's a string of
doesn't
letters.
cost
That's it.
physically. It's a token that you store in a wallet.
Right.
So basically, you know, if I have a card, playing card, and that's a Bitcoin, and that's in my wallet, it's a matter of transferring these cards between me and you if I'm going to buy something.
And it's done digitally on top of that. Yeah.
Right, but my question is, if you mine this, okay, we're using the computers, and the end result is you get a coin. How do you get the coin out of the computer? You know, it's got to be deposited someplace, and you
Yeah.
really don't get a coin. They may
Yeah,
call it Bitcoin, but so it's
Yeah,
the-
that's what they have. Like Ethereum is one. They have a number of different exchanges. That's where you park it, and you
Right.
own a Bitcoin. You have a token. That Bitcoin is now worth $48,000.
46, 47,000. Yeah. And Morley, you would just move this digitally at 47,000. And if Elon Musk is accepting it, you're moving him one coin. I just bought myself a car for, this is the first time that that's been done. Okay. It's only been moved before on drug and laundering money. Boom. And that's the way that that's moved. So all this is moved digitally, which is how we started the conversation, that cash and checks and so on and so forth are starting to decline. And there's other types of currencies that are taking their place. Not Bitcoin yet, but you may be on the verge somewhere along the line.
we'll see.
Yeah.
I wouldn't buy it.
It's too early to call a shot. And if it wasn't that Tesla didn't make that statement last week, I would have just said it's a collectible and that's it. And it goes up and down like any other collectible.
Well, what was it when he made the statement? It wasn't at 48,000.
They didn't clarify that. That's interesting that you asked that. He just said that they would accept it as payment. So my gut is that if that is the truth, and I don't know that anybody bought a car yet, but if that is the truth, then depending on what the value of the Bitcoin is that day, then you'll know how many Bitcoins you need for an automobile. Okay.
I got a quick question. Let's say the cost $30,000, Bitcoin's worth 45,000.
Right.
How do you get change?
Good point. I don't know. Can you buy it in? Can you buy them in fractions? I don't even know.
I don't know.
Yeah.
Sure.
You can
Yeah, I
move,
think you
Sure.
can
move
fractionalize.
fractions.
Yeah. Yeah.
And that's
That's
what those exchanges like
That's not the
Robinhood
biggest.
does.
Yeah, that's not the biggest challenge.
Yeah.
Well, let's see how this plays out.
Where do you
Where
want to
the
go?
market is going? This is the important question.
Well,
I'm
let's
sorry?
put it this way. On
Where
January,
the market is going?
The
Oh,
Where's the
market.
market going? Okay.
on
Morley,
January,
you want to take that? Where the market's going?
Yeah. Okay. The market has done spectacularly over the last 9-10 years, and you're at a point now where, given this coronavirus thing, it's affected the economy, and the market has kept going up. And the reason I think it's kept going up is basically because the market's forward-looking. It's not looking at what's going on now because everybody knows that, but they're looking out and saying, all right, at some point the pandemic is going to end, whether it's sometime in 2021, sometime 2022, whatever it is, things will come back, and it'll take a while to get real normal. But the earnings estimate, based from analysts and economists, for the earnings for the S&P 500 for 2022 is about $195 a share. Given where the price of the market is now, the S&P 500, that's about a 20 multiple. In other words, 20 times the earnings. Well, if you look back historically, 20 times earnings is the high end of the range historically for the S&P 500. The only difference is that now, instead of having bond yields of 3, 4, 5, 6%, you got bond yields of 1%. So, you got to say to yourself, what is the correct price earnings ratio for the market when interest rates are 1%? Because stock market is affected by what interest rates are. The higher the rates of interest that you can get, the less attractive the stock market is. So, right now I think you're seeing signs of speculation maybe we're nearing, what might be a big market top, and you're seeing things like Bitcoin, the shorting, a lot of these companies that are a couple of $1 billion in market cap have no earnings yet. They have future earnings possibly, but the market's paying big prices for these. So you've got mixed signals, which you always have. But I think the best thing right now is not to dump all your stocks, not to get all your money into stocks, but to come up with what's the asset allocation for stocks that you can feel comfortable sleep at night, so that even if the market goes down, you could buy some more, but you're not going to panic. So
We've upped our.
Is it
Go ahead.
smart to keep cash waiting for a downturn?
I'll say that again.
Cash working for what?
Is it smart to? I have cash waiting for this downturn. It doesn't come.
Okay. The
It
answer
doesn't
to the
make sense. So I should just get into the market and
Right.
get cash.
If you have cash and you have no stocks to begin with, then you got to really.
I have stocks. I have 35% invested in the market.
Okay,
And
so
the
I
rest
would
is interest.
why do you want to put more money in?
No, I think he's saying,
Because the market is going up all the time, and I'm sitting with cash, waiting for something to happen. Nothing happens.
Well, and a lot of people feel the same way, but you know what? When we get clients that call up and they say, "Look, boy, let's get back into this market, or let's get into the market. I want to buy more." That's the point where market tips and goes down. So you got to be careful. You're going up with 75%. How much more do you want to put in? Another 10%?
Yeah, I was thinking about reaching 50%. Yeah, another 15%.
15%. Okay.
To be 50-50 kind of,
Okay, so you're talking about the markets and generalities. Take a look at the sectors. There are certain sectors in the market that have underperformed where Morley is giving you those numbers. That's where you want to take a look. For the most
So
part,
which one, like cyclic?
since the market bounced back after that precipitous drop in March, April, and May because of the virus, okay, for the most part, it's been a momentum market, okay? There's sectors in the market that are not only at 20 times earnings, but up to 22 and 23, and many of the tech parts are north of 30 or 35 forward earnings, okay? You may want to take a look, and there's two ways to look at it. One, that you've got quality companies that have been underpriced in this market, and they may be, there is some coincidental evidence, they may be what we're calling companies that are getting ready for the reopening of the economy, yeah? And you'll see the valuations, take a look at the valuations, look what the analysts who live and breathe with these companies every day, look at their target prices, and look what their forward PE is, okay? So you may want to take that extra 10 or 15% that you want to put in the market, not to just say, oh, I'll take the Vanguard S&P 500. You may want to be surgical and do it that way, okay?
Are you familiar with the ARK innovation?
I'm sorry?
With Christy Wood, ARK innovation.
Yeah, what about it?
I mean, they're doing very well. So I did buy
we
some
own
of that.
we own some of that. Again, that's not what I'm talking about. ARKW and ARKK, I think is the other one. You're talking
RKQ, RKT, yeah, I bought the RKG.
Excuse me. What you're talking about there is next generation, mostly technology. Okay, that's not what I'm saying. I'm saying just the opposite. You've got good valuation companies that have a dividend and have upside potential for total return. Okay, those companies have been overlooked. I'll give you an example. Coca-Cola. Okay, Coca-Cola has been badly impacted by the virus. Why? Because fountain drinks are getting walloped because nobody's going anywhere. Now, this may not happen till 22 or maybe early 23, and it may not be back to the level of 19. But with a dividend and some growth where it is, where you're entering, you may find that that must be a much more conservative way than buying ARKW, which is depending on whatever next generation technology is coming down the pike. It also depends on what your portfolio looks like now, okay? You may have a lot of value stocks, or you may only have technology. So you've got to take a look and make sure you're asset allocated correctly. That's one of the big challenges for retail investors. That and knowing when to take a profit and either shave your position or get out and move on. That's the biggest, we've talked about that before. That's the biggest challenge for the average retail investor.
Well, I mostly S&P, and I read that through all the years, if you take 20 years continuously, there was never a time when an investor lost money. I mean, for us, maybe 20 years is now too much, but
you have another 20 years to go for the next 20?
well, maybe for my kids.
Well, so there you go. So when you're saying we were talking about 9, 12, 18 months out, that's a big difference than saying, oh, let me throw it against the wall and see if it sticks for the next 20 years. And like Morley says, you're in a very, very momentum market. Market went up 11% November. Be careful here.
Say it again, what be careful of what?
I said be careful here. As you're entering, make sure that you're entering, if you're buying individual companies, make sure of your entrance price when you're going in. If you're just going to throw it to an index and you don't care for 20 years, then you pick it, all right? We won't all be around 20 years to find out whether you got in right or not. And again, are you just sitting with it for the next 20 years? Or at a point of a reasonable return, if you're getting 1% on bonds, and who's the maven on CDs? Is he with us tonight? I don't think so. And running around for 0.2% to the bank, then you know what? If you've done well on a particular stock and you got a 10, 15, or 20% return, take a look at that and say, hey, you know what? I did okay. Retail investors tend to get greedy, and you're always thinking things are always going to go up. We weren't around for the 1930s. They didn't go up that time, right? Or in the 1970s, the market started in 1970, finished in 1979, flat for 10 years. So doing value investing at that time certainly paid, because at least you were getting a dividend on your investments. So right now, everybody looks like a genius. It was interesting.
What do you think about stocks that pay like 15%? I can give you some names, 15% dividend.
Oh, yeah? Okay. Go ahead.
Okay, let me find it just a second. I need to go to Yahoo.
What's the dividend, did you say, Isaac?
No, guys, I'm looking at TikTok recently a lot, and
You
they have a lot
want to share your screen or you
no, I'm looking, I cannot. I'm searching something on my, just a second, let me see, where is the interest? I mean, there are several, there are 3 stocks that give you like 15% interest rate, dividend, which I never heard before. Where is it? Just
most of them are REITs. That's
dividends. Just a sec. Okay, so one is NLY that pays like 15%.
What's the symbol?
NLY.
What is that?
Annaly Capital Management.
Oh,
Annaly.
It's an ETF, I think. That
Another one is CLM,
okay,
which is Cornerstone Strategies Value Fund,
right.
and CRF.
Okay, so I'm going to give you a little homework for the next
meeting. Yeah, tell me a little bit about what's going on there.
Why don't you research those 3 and find out if the earnings and the dividends meet each other, okay? Or are they giving you back part of your principal that you invested when you take a look at the price of the stock? Yes?
Which means they're going down?
Because it's almost impossible for them to give you a 15% dividend. There's a misprice.
That's why I'm asking.
Uh-huh.
Yeah,
So
that's why I'm asking. Yeah.
Take a look at those three companies and see how are they paying you a 15% dividend. All right? And maybe you'll
Right.
tell the group next time we meet how they arrived at 15% on their money. When the Federal Reserve is at a quarter of 1% interest rates and high yield, at the best high yield, 6, 7, 8%. And you've got three companies that are paying you 15%. Yeah.
No, the first one is 15, the second one is like 12, and the third one is like 10.
Great.
So only
Take
the
a look at
first
all
one was
three of them.
15.
Yeah, all three of them. When the dividend rate is that out of proportion, and it could be REITs, but then REITs are in trouble right now. Take a look at what your principal is, take a look at the price of the stock and find out how are they paying you that dividend. You can report back to the group next week or next month, excuse me. And I think we'll find something very interesting. Okay?
Okay.
Good.
I will take a look as much as I know.
A simple rule is that, if you're getting a very, very high dividend that's out of reality with what else is going on, is risk. And I know why is, but it's got risk to it. It had done very poorly. I think it had a reverse split, and it was selling for like, I don't know, $5 a share. But anyway, if you look for a higher return, you've got to take a higher risk. And the other thing to keep in mind as a retail investor is that everything is known about a company by investors as a group. And if the investors as a group say, we need to get 10% from this investment because of the risk, you can be sure that it's a big risk.
Absolutely.
But you can buy good companies like General Mills, Campbell's Soup, and these are 3 to 4% dividend yield type companies. UPS, I think, has a 3-point-something% dividend. So, if you don't want to buy the individual stocks, there's 3 things that you can buy. One is SDY, one is VYM, and DVY. Those are all dividend income type ETFs. And they probably average about 3.5%. And have
Well, I
some
can get it in my 401k, so I don't, I can get the same 3-4% in my 401k.
What is the percentage of your portfolio that you would say is high risk in the portfolio you're working with?
Well, I have, as I said, the 35% mostly is S&P. I have like 5% in stocks, which I'm just playing around with. And the rest is 3 or 4%, in my 401k.
Well,
My
where does ARKW fall in?
I just bought them like a week ago,
Oh.
like a little bit, 10,000, 15,000, but that's
Okay.
it.
All right, because when you start to step on that, and we're talking Bitcoin, you're starting to step up your risk. So maybe you should stay with your 25% in cash. That's a high cash allocation for most equity portfolios. Okay. The average, I'd say the average, at least that we keep in our portfolios, is no more than 10 or 15%, unless we have a client, that has a cardiac condition that we're concerned about. Right?
Michael, I have, someone sent me a chat. I think, Ellie Coral. Do you know a bank that's giving a decent interest rate? That was question 1. Question 2, if you keep cash, very low interest, what is an alternative if you don't want to be risky? And 3, when do you sell and take profits?
Well,
Question 3 is what we all want to know.
the last question is that, as we said before, if you're getting 0.1% on a CD, okay, or I think it's 0.1, maybe 0.2 in some cases, depending on how far you want to go out. And you take a look at this gentleman telling us 15% on something. So you want to take a look and say, like Morley says, what is the risk we're taking to get it? So let's say that we were all smart enough when GM was tanking a few years ago and said, you know what, I just know GM is going to turn things around and they're going to catch up in the electric vehicle business, EV business, we call it, right? And all of a sudden GM is up, I don't know, 21, 22% over the last year and a half. that's something that you can certainly ride for a while. You may want to take some of your profit off, depending on the position you're taking. If you're buying a few hundred shares, I'm always in favor of taking at least one position off and getting my money back. Then I'm playing with the house money. Yeah. So that's one way to cut in case the market tanks on you. You're not taking as much risk as what Morley indicated before. And that's just called pairing your position. All right. Think to each one of yourselves, if you made 10, 12, 14% on your investments this past year, that's a nice return. Where else are you going to get that? Nowhere, right? You may have a couple of tech stocks that are going through the roof, like a Microsoft. Great. But if you own a few hundred shares of Microsoft, there's nothing wrong with taking 25 or 50%. It's not a black and white situation. Nothing wrong with taking 25 or 50 shares off the top and redeploying it somewhere else. Okay? I mean, that's the challenge. Look, that's the challenge when you're running your own portfolios. You know what you're doing. It's fine that you're doing it, but those are the risks that you're taking. It's very difficult sometimes to manage your own money. Okay, how many could step in last March and April and buy as you thought the world was falling apart and the market was down 36%? I bet you if I asked for a raise of hands, very few people were stepping in strongly. Didn't know what the hell was going on. Okay, so it's not easy to invest your own money because you're emotionally involved with it. That's the difference of having some of your monies probably invested professionally because they're removed from that type of situation. All right. I guess the woman was asking how much is that what you're asking about banks? She meant CDs, doesn't she? Len?
Yeah, let's see. She was asking, do you know a bank that's giving a decent interest rate?
No. You do better to buy the bank and get in the stock of the bank and get a dividend. Okay.
And then if you keep cash very low interest, what is an alternative if you don't want to be risky?
Nothing.
Yeah, I mean, yeah, okay. So there's two ways, depending on her risk tolerance, there's two ways that you get some of your money back. Find a company that issues preferreds, okay, like banks, a preferred. You'll know exactly when you get how much you get back when they call or the preferred matures. You'll get much better there. There's some risk involved, but not the same as buying a common stock, okay? That's a step above on the debt structure. Like Morley says, if you don't want to take any risk, keep it in your pocket. I mean, there's some risk to everything. You could buy, there's plenty of ETFs and closed-end funds that you could buy with bonds, as long as you have the same time horizon as the gentleman that tells me about 20 years. Interest rates will bounce back and forth. In 20 years, she'll probably come out and be like a champ. Because those bond funds will oops, did we lose? We lost everything.
What happened?
I don't know.
Mike's screen come back on again here. What is it?
Yeah, whatever you did, see if you can do it before.
I didn't do anything.
No, whatever you did before, try to do it again.
All right, let me just see. So stop others.
What's this view options up at the top? Next to your.
Oh yeah, you're viewing Mike's screen.
What is that view options?
And view options. Let me see. No, that's just expanding the screen. Steve, we need your help here.
Yeah, well, it's somebody sharing a screen, and
I don't know how they're doing it because I'm the host.
so what does yours say? Share?
Now you're back. You're back.
Now you're back.
I don't know.
How are they able to do that, Steve? Because I'm the host.
Should be able to.
Did we just get hacked into some way on
Well, first of all, we're using the Stonebridge Zoom account. So anyone who knows the password might.
so maybe that's it.
Yeah. Mhm.
Yeah, they could have called a meeting.
Right.
Can I ask another question for the group?
Yeah.
Which financial subscription service is you're happy with? I had Morningstar, last year I lost money. According to their advice, I stopped it this year. Is there any subscription that people are happy with?
We use them all, so I have no comment on that.
Well, you
I
might-
use like,
Value Line has been around for a long time.
Yeah, Morningstar, Barron's in some cases, depends.
yeah, so Morningstar said the stock of Exxon will be 80. I mean, they evaluated 80. I bought it at 60. When it was 30, I sold it.
Okay. Well, if you wait,
So, I don't know.
it looks like it's going to go back to 60, right? It's in the low 50s now.
It's already at the 50s, maybe,
Yeah,
no, 40,
low 50s, yeah.
40 something.
It's a demand and supply issue. Long term, you're going to have a challenge unless they change their business model. Okay. In the short term, prices, as you've noticed at the gas pump, is going up because the supply factors come down. Demand has stayed steady. Demand will start to go back up as we go through 21. So, you know,
Yeah,
obviously,
it's probably in a couple of years, Exxon will do well because according to Morningstar, it's a good company.
yeah. Well, like I say, you know, doing well is all relative. Okay. They're going to have to change the business model to where the world is going, which is, you know, less use of fossil fuels. Otherwise, you'll be in a coal situation where, you know, you don't want to have a coal mine today, do you? So, you know, that could be the case. The last answer to that question that you had, Len, would be there. Morley called it. There's no good answer for, you know, there isn't any good for CDs. I mean, the only CDs you could say there are such things. We talked about this before. Callable CDs. You may get 5/10, 6/10%, but you're going out 3-4 years and you're hoping that the bank calls the CD back. There may be a call feature on it that's every 6 months. Alternatively, you hope they call it back and you've made better on the spread. But, you know, why are you doing that? Okay.
Well, there's also, and there's nothing short, there's nothing without risk, structured CDs, so-called.
Right. You know, I
That-
mean, okay, I'll tell you the risk that you're taking by doing that. And do we have a time limit? We have to finish up. I'll make this short.
No, we don't,
Okay.
but, you know.
I was
people
part of a presentation. So some of you asked where things are going. I observed the presentation of the following. History repeats itself. Let's hope we're watching this impeachment trial that we don't see any more of this, okay? Once is enough, or twice is enough. History repeats itself. Both presidents that are dealing with this call this a war, right? COVID-19 a war. They've referred to that a number of times. Take a look at what the American economy, different than now, dealt with in the years of 1946 to 49, a little before my time, but easy to research. So what you had is all production for the United States at that point was pretty much used for the war effort, yeah? War ends VJ Day in the middle of 45, 46, 47, 48, 49, huge demand for goods. In those days, women wore nylons. Anything that was made, chemicals, was used for war efforts, all right? A loaf of bread went from 5 or 10 cents to 15 or 20 cents. The public was yelling. I couldn't believe it. Things were out of control. And if you look at the 1948 election, that's why Truman almost lost. It was a surprise that he won, remember? They thought that Dewey had won it, okay? There's probably some striking comparisons as we move our way out of this of pent-up demand. So the factor I'm bringing up here is that you may find by being so overly conservative as this person that you mentioned, Len, is that by owning something or the gentleman with 25% in cash, that your dollar will not be able to buy what it could in 2019 or 2020 that it could in 23 or 24. You may have some pent up inflation. The Fed sort of takes it that they're going to trail this. They're not going to get out in front of this, if you listen to the chairman of the Federal Reserve. So one of the risks you may be taking by doing nothing is facing an inflationary economy coming into 22. And that's what maybe the market is telling us right now, all right? Generally, the market does pretty well in inflationary times, you know? The only time that was a struggle, and it was for other reasons, was, I'm sure we all remember the Jimmy Carter days going into Reagan, when they had to raise interest rates so much to get on top of inflation, right? So we know better now how to control that. The other factor, and I think Morley Goldberg brought it up 1 or 2 sessions ago, was this explosion in technology. We're unbelievably efficient, more efficient than we were before, okay? And that has cut down certainly the cost push of inflation, basically labor, okay? Though you see you have a cost push now to have a minimum wage, a national minimum wage of $15 an hour. Well, we've said this before, instead of having 5.2 people serve you at McDonald's, they figured out a way to do it with 4.6 people, you know? So in that way, you can control some of your inflationary pressures by doing that. So, so take a look at, like I say, post-World War II, we may have some of the same kind of factors if you're looking to see what may happen next over the next 12 to 18 months, with the assumption that the vaccines are going to work and that the people that like to cruise here will cruise by sometime in 2022 without getting too sick. Okay?
You may be right on that. So there is one big difference. After World War II, the US was the only game in town because Europe and the Far East were totally destroyed.
You're correct. In fact, what we did is with the Marshall Plan, we gave a lot of that money away so that the countries in Europe could buy goods from us.
Right.
So we really supported the manufacturing part in the United States. Now, I realize that everything is not going to be exactly the same, but you may find demand and supply possibly because the supply will not catch up with the demand if we have this pent-up demand. Look at the pent-up demand for, what do you call it, handy wipes, you know, Lysol, you know, they can't get on top of it. Well, you can't build the machinery fast enough for those wipes. To do that, it probably takes 18 to 24 months to build a factory like that.
You know, you're absolutely right. There is a lot of pending demand. I, for one, am waiting for the day I can start traveling again. Many people are.
Thought what?
When I can start traveling again. And
Traveling, there you go.
Many people are, so.
Right, and that'll be okay because you have a lot of dead wood right now of hotels and cruise lines and airlines. That's why they're trying to keep the airline business alive, because they figure that, you know, we'll want to fly. I think there's going to be some changes in this decade. There's going to be a new normal. And I think some things are going to change. I think business travel is going to change. And that's how companies are going to become more profitable in some ways and keep their costs down. They find out, like what we're doing right now, they can do, and we don't have to fly to the Far East or California for a one-day meeting or whatever the case may be. There'll still be some of that, but I think we can be much more efficient. And that's what this pandemic has taught us to do.
Okay, Michael or Morley, could you comment on the future of the malls like Simon Properties?
Okay. Again, it's just my opinion that the malls have to reinvent themselves if they want to succeed. And you know, there's been talk that they could turn these big malls into part playland, where, you know, you've got all the rides and games and stuff, and part retail shops. The other thing I heard was turn them into living places, you know, turn hotels, well, that's hotels. But, you know, they will come up with some way to resurrect themselves. I'm not sure exactly what it is, but, you know, I think they're going to have a rough time because people who never shopped in line before on the internet, because it just wasn't their thing, they were sort of forced to do it. And they said, you know what, it's not so bad. You know, I'll do more of it. So you're going to see more of the sales through the internet, less sales through retail shops and places in the mall. My opinion.
Even the gentlemen who wanted to travel here, they're projecting travel for 22 will be more the outdoors than packing them on cruise lines, that people are not going to want to be on top of each other and breathing, even when everybody is vaccinated, okay? That the first round of travel will be more of the outdoor kind of feeling than packing them in, or having 20,000 people in Madison Square Garden, yelling and spitting on top of each other, okay? Now, gradually we may get back, but, depending on what timeline that you're going to have, there's going to be a different type of normal, especially maybe people younger than us also.
Yeah, I heard that, what is it? The cruise line, I think it's Cart.
Carnival? Yeah.
Begins with a C.
Yeah, Carnival.
They issued 3 to 5 year bond to 2027 bonds.
They need money to carry them over.
What?
They need money to carry them over. Sure.
Yeah, but who's going to buy it? They have no income. That was what the comment was.
You'll always find a group that may, in other words, if the interest on the bond goes up to a certain point, you're up to high yield. You'll find professional investors that just focus on high yield, that if they get that kind of number, they'll buy them.
The yield was 5.7%, which
that may not
exactly high yield, right?
That may not do it.
Yeah. Anyway, are there any other questions? I appreciate Steve doing all the work for this one, and Michael and Morley willing to step in. And if anyone has some idea of topics and speakers, we're open to ideas. I mean, I have one thought, and it's not always possible to get past a certain point. But if someone else has a speaker or speakers, then that would be great. If there are no more questions, we recorded it, and Steve has been helping me with the recordings.
Yeah, Len, I have one question. When do we think that the clubhouse is going to reopen?
Okay, wait, my crystal ball is broken, Michael.
Yeah. Do we have a date? Do we have anybody that knows here?
Ask Steve.
They're saying they're on target for the end of March to be completed. But again, it depends on the governor.
So we can count on probably the end of April, is what you're saying? Yeah.
Yeah, if the governor allows it. Yeah.
Okay.
Have they done the construction work inside the clubhouse?
Yeah, they'll be finished. They claim they're on target.
Good.
And it'll be completed by the end of March.
Great. Good. It's a month away, 6 weeks away.
Yeah.
Wonderful.
And at the last board meeting, Jerry Morelli answered a question, will we be sitting by the pool this summer? And he said yes.
Okay, good enough.
I hope, I don't know whether we're going to be 6 feet apart, but
Will there be water in the pool?
Good question.
No guarantees.
Are they redecorating the clubhouse, new carpeting, new furniture, stuff like that? Or is it going to be the same stuff that's there, just new air conditioner?
They haven't, they're going to be doing some of the architectural work, but they haven't released what they're doing. I know they have an architect in, he's looking, he wants to reconfigure some spaces. I heard there wasn't much or a lot of it going to go on. The air conditioning is the key.
Yeah.
I heard they're buying new gym equipment too.
Oh, good.
Yeah. Okay.
I'd like to use the gym. Great. All right. You answered my question.
All
Hey,
right.
everybody, have a good month. And I guess we'll see you, Len, in a month, right?
Okay. Yes.
Take
Thanks
care.
a lot.
Bye.
Okay.
All right.
Thank
take
you.
care. Bye-bye now.
Thank
Bye.
you.
Take care. Thanks.